Welcome back to Morning Markets from True Potential. This morning I'll be reflecting on stock market performance over the last 24 hours and what the key drivers were. Then I'll be touching on the new US infrastructure bill which finally passed yesterday. In equity markets here in the UK, the FTSE 100 closed up 0.4%, whilst in more domestic market, the FTSE 250 was a little bit stronger, up 0.5%. Over in the US, the S&P 500 was up marginally, up 0.1%, whilst the Nasdaq was down by 0.5%. European equities were also positive, up 0.4%, whilst overnight in Japan, they were also up 0.6%, so good readings across the board in general. European equities closed higher, with travel and leisure and basic resources sectors being the strongest contributors, whilst healthcare and real estate were the weakest. The Eurostoxx 600 hit a new all-time high following the ongoing optimism about robust earnings momentum from companies. We saw strong earnings reported by companies such as HelloFresh, who have been seeing persistent high order rates. The strength of earnings reported by companies helped to offset some of the weakness we saw in some of the economic sentiment data, specifically the data coming out of Germany yesterday. However, as we reported a couple of weeks ago, overall European economic sentiment remains at an all-time high. The key event yesterday was the passing of the $1 trillion bipartisan infrastructure bill in the US. The Senate, which is split equally between the Democrats and the Republicans, voted 69 to 30 in favour of the bill. A real positive to see two political parties coming together to overcome issues. The infrastructure bill will disperse $550 billion in new federal spending over the next 5 years, upgrading America's roads, bridges and tunnels, as well as airports, rail networks, and the power grid. The bill will also look to target clean energy and provide high-speed internet. Interestingly, the bill also included a controversial plan to require cryptocurrency transactions to be reported to the US tax collector. What next? Well, the Infrastructure Investment and Jobs Act will now be taken up by the House of Representatives, which the Democrats control by a slim margin. House Speaker Nancy Pelosi said she will only consider the legislation at the same time as the much larger, separate $3.5 trillion budget bill that contains new social programs and climate measures, which the Democrats intend to pass without the Republican support. This larger bill will be challenged by the prospects of higher corporate tax and capital gains tax rates. Whilst the bill was a big positive for markets, it was very much expected, and therefore we didn't really see much response across financial assets. Bond yields, we saw little movement here in the UK. The UK government 10-year yield edged up by 1 basis point, currently at 0.56%. Over in the US, we saw bigger movements with the US 10-year government bond yield pushing up 5 basis points to 1.36%. In commodities, we saw a little bit more strength in oil. Oil Brent crude up 0.4%, and in gold a little bit more positivity, up 0.3%. In currency markets, very little movement. The pound is still at 138 against the dollar and at 118 against the euro. In terms of what I'll be watching out for today, it will be all about the US inflation data report. US annual CPI inflation came in at 5.4% last month, a high reading, but from the Federal Reserve's perspective, higher inflation, i.e. a reading well above 2%, is still very much likely to be expected to be transitory. This expectation will be tested should we see a much higher reading than the last month's 5.4% or the 5.3% which is expected today. That's all for today. Thank you for listening, and we'll see you again tomorrow.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.